Welcome to Invest. We talk about investing, finance, and professional development. As the current time of 10:26 a.m. on the Eastern Time on December 22nd. Hope you guys have a good week, and we are 3 days away from Christmas. With respect to Ethereum, currently $1,188, that's about 2% so far. As you can see clearly on the left side of the chart, we are bright red across the entire market on the crypto side, but also with respect to the equity side as well, we are both being suppressed at the moment. And if you look into the media front, you can see that across the spectrum, we are relatively, suppressed, still experiencing this sell-off dynamics, with the VIX is currently higher due to just more fear-mongering with respect to a lot of news just talking about that with respect to 2023. We might foresee, more global rates tightening. It seems like, we might just rate hikes all the way until we hit Armageddon. But I mean, obviously, this is more just a media affectation driving more fear. Ultimately, what's behind the scenes on what the whales on a corporate investments perspective are doing, that's something we have to take a closer observation of, right? Oftentimes the news are the kind of, I'm not saying is direct opposition, but they might be trying to mislead public investors or retail investors onto taking the right logical steps, right? But obviously, if you take a look at this on a more of an observational front, we are seeing a lot of companies being suppressed, right? Like AMC, for example, is talking about this as of this morning. The stock has plunged after the theater has announced capital raise and proposed reverse stock split, which means that the company is in dire of capital to sustain its operation without going belly flop. So that's number one. And then with respect to other news, you could see that small trivial news, I would say. Seems like NFL Sunday ticket goes to YouTube in $2 billion in annual deal. That's a pretty good strategic partnership, I would say. Because people use YouTube nowadays. I get most of my information as you are on all fronts, via YouTube. It seems like YouTube is becoming, more of a adopted type of a platform in comparisons to, the way that TV entertainment has evolved, right? It started from just like, the antenna TV, like a box, right? I don't know if you know what I'm talking about if you're too young for this, to cable TV, like Dish Network, Direct TV, Time Warner Cable, and things like that. But now it seems like people are just shifting onto obviously Netflix, Hulu, Paramount Plus, Disney Plus, all those stuff. But I think YouTube and other form of media platform is being more and more adopted because people ultimately like that flexibility that they can utilize on their phone. Live television is not like what it used to be, but obviously with respect to live sports, that's still very, very popular. But like in terms of like TV series, shows, and stuff like that, people definitely like to have the freedom on watching when they want to, not just having to watch the commercials alongside with the show, which I find it to be quite annoying actually. I like to actually skip through it if I could. And with respect to some other news, obviously from yesterday, Zelensky has visited the Washington D.C. And it was basically just a good bonding experience between the U.S. and the Ukraine government. And I saw that just on a glimpse on TV, I saw that Zelensky was gifted by the U.S. government the flag that was flown over White House and D.C. for that day as a sign of just I guess trust and friendship between the two countries. It seems like U.S. is definitely in supportive of what's going on with the war on the Ukraine side, obviously, to counter the Russian tactics that has been hindering the global relationships, economy, etc. So let's just take a look at the whales before I go into the technical to see what's going on both ARK Invest and BlackRock front. All right, so seemingly with respect to ARK Invest, it was definitely more of a mixed day, not really pointing one to another. But let's take a look at what happened with BlackRock. So it seems like BlackRock is, let's see, firstly. It seems like it's more of a mixed day as well, but I think, collectively, it's definitely more of a neutral day. But I think if you add up the dollar now, I think it was definitely more of a sell day in comparison to a buy day. Which is, we're still trending on sideways fashion, not really pointing up or down. A lot of the news that we're seeing, right, is more speculations, as you can tell. So it is what it is. So let's take a look at the technicals. We are, as of recording time of 10:31 a.m. on the Eastern time. On the daily front, you could see that we are bouncing from 1250 versus 1150. Right now, we are looking to kind of, coming down a little bit more. It's definitely more of a bearish trend. Coming down to a next level of 39 out of 70, which is the next level of support. If we break that, we'll go down to the 34 out of 70 on the support level. It seems that we are still gliding, and you can see that we're slowly forming some separation between the two lines. On the weekly, this is something that we need to kind of do, and this is something we have been foreshadowing for a while now, is that we need to kind of cross down before we cross up, right? So the next level of support is not going to be 1150, but it's going to be 1050. So that's something we have to look out for. And I think as we complete that cycle on daily, weekly, and monthly, that all the yellow lines are on the opposite side of the spectrum that is about to kind of plateau and cross up. And that will triangulate into, a bullish pattern, and that will allow us to elevate from there, technically showing that there's a bottom that's being formed. It seems like we are already relatively near on that front. And then on the Bitcoin side, I would say quite similar, like 15,500 would be the bottom, technically, on the technical front. With respect to the cross section that we still need to kind of form, right? We need to kind of cross down before we cross up. The next level of support is 32 out of 70 on the RSI scale. On the daily front as well, similarly at the 40 out of 70, right? And then on the SPY front, we are forming, more of a, I would say, neutral pattern on the monthly, but weekly and daily will tell you a better story. It seems like weekly is quite bearish. You can see that we're about to form a death cross. And to do that is because we need to form a head and shoulder pattern, reverse head and shoulder pattern. So that means coming down to a lower level like 365, 375, which is where we're heading to right now, is very possible. And basically to match with what we were forming before, as another shoulder. So we have a head, we have a shoulder, we need to form another shoulder. And to do that, we need to cross down for us to reach to a lower level, 37 out of 70 before we cross up. Daily, it is looking bearish as well. So it's a large separation, so something we need to kind of look out for. So something you want to be cautious about is that we might see some more negativity because of the upcoming FOMC meeting that's going to be in Jan and Feb. Tax season in combination. I think Q1 typically is a little bit more suppressed than other, quarters of the year. So that's something we have to kind of be cautious about and hedge against, because seeing lower levels would not be a surprise. But as we get over that hump, I think ideally in Q2, Q3 next year, we should ideally see some elevations or some bullish pattern that will start to form, which aligns the daily, weekly, and the monthly chart on the technical front. Okay, so appreciate you for joining me today. It's a little longer one, shorter one, whatever. We are around the corner of the holidays, so have a good holidays to everyone. I will most likely be checking with you guys on, despite holidays, I'm still working anyways. But appreciate you for joining me and have a good day. Take care.